I heard the music today. Good morning. Thanks, guys. Got that back on cue. I think you guys heard the music yesterday. If you haven't heard it yet, it's singing in earnings terms. So I had a chuckle this morning. You gotta chuckle at the media, the mainstream market media that's blackballed mucker. It's just laughable at this point. Mike, get on the program here, buddy. We're paying you for all these big time premium terminals. All he can do this morning is he can't even, they can't even, he's responsible for it. I know he didn't write it, but yeah, Bloomberg can't even write the words all time highs on the main website. Like they can't even say it. Say it. Right? You watch Wedding Crashers? Oh, come on. I mean, it's like, just say it, right? US stocks close at all-time highs. I've been writing down in my notebook the price of the S&P 500 for 27 years. And I can assure you that it was an all-time high that I wrote down yesterday. And I can also assure you that it's because earnings accelerated to their new cycle peak. Okay? So we go through that this morning. If you're a good Bayesian boy like me, you wake up in the morning and you don't ask Mike for permission. You don't ask Jamie. You don't ask the establishment. You go in there and you calculate the numbers. And you go 89 out of 500 companies have reported S&P earnings of 21.5% growth. Well, that sounds pretty good, right? 21.5. Well, the Russell's better at 23. And the 21.5 in context, the best quarter the US has reported in the aggregate, and we're not saying it has to close at 21.5 or 17.5, but the best quarter you've seen on earnings growth since 2021 was 15.1. Okay. So the number one reason why stocks go up is because revenues accelerate and cash flows accelerate. Everybody, including Mike, knows that. So let's just be thankful. Let's just be thankful for Mike and CNBC and all that stuff. All their political angles, which, 5 straight up days later, after the world was supposed to end due to Powell, Greenland, and Minnesota, evidently didn't matter. All right. Bennett, good morning.
Keith, good morning indeed. You didn't have to do my restaurant friends on the old wall like that, but we got D-Day for restaurants here this morning as we kick off earnings season. We ran caboose on a great slate of themes decks yesterday. One of the companies we profiled, Keith, one of the companies we also talked about on the call, Eat Brinker. When we moved onto the long bias list in unison with the flip and the signal, and after we fend off all these old wall restaurant guys and gals that continue to mismodel Chili's traffic. And what would you know? The company reported a remarkable quarter one with, those who had nothing better to do said, how would they comp these 30% comp compares? Chili's same-store sales came in at 8.6%. Now sequential decels, yes, but the street at 5 and change, right? We were at the upper range of 7.5, 7.7. Chili's is up 5.5% in the pre-market on the continuance of strength reflected not only in the headline number, but also taking up guidance, now 5.8 billion in revenue versus the prior at 5.65. Net income up, CapEx down, which I'm eager to hear more about. They beat across the board. They're oozing excellence once again, despite these comp compares. Now that's great and all, right? But the long-term opportunity for this brand, Keith, is in their renos and the potential for the reacceleration of unit growth that takes them from a segment average company to really a heavyweight in the casual dining segment, a place that I think they're continuing to prove that they are. This brand comes into their third fiscal quarter, Keith, with accelerating traffic as the street continues to project a deceleration. Keith, not sure how that works on accelerating data. You profiled it in macro themes. Open table seated diner bookings are up. Dinner bookings are up. I have no idea on that one, but I'll see all my old wall restaurant friends tomorrow. Starbucks Analyst Day. It doesn't sit right with them when I plop down right up front. So looking forward to that tomorrow.
I love that. I love that. I used to plop my ass right in front of Princeton's net, and I wasn't drafted. Who the hell's this guy? Well, you're going to have to deal with this guy, was the answer. And that's why we won the ECAC, and they didn't. Anyway, I did my little part in it. But again, I got a big butt, and big butts don't lie, right? You got that going on. You got Bennett's got a big butt. He likes butts, buns, everything. You know it. But again, hedge funds on Monday morning quarterback comes in and starts shorting Brinker, Darden, any of the stocks that are bullish trend that Bennett covers on the storm. And they forgot that the quarter that they're reporting doesn't include the storm. Yeah, you don't even have to go. You don't even have to go to high school to be better than some of these hedge fund narratives, right? Again, anyway, moving along. Nice job, really good job. Let's put the EAT on the top 5 most actionable. Just to highlight that, there is a laundry list of signal strength longs here from Bennett that you can find out of the 85 names. He's had some of the actually he's had the most additions to the list. Names like BJRI, EAT, DRI, Texas Roadhouse, Cake, et cetera, et cetera. Actually, McDonald's just went back to bullish trend too. That's not
Yes,
casual dining,
sir.
but Bennett Eats there. Believe him. All right.
60,000 McDonald's points and counting, Keith.
So let's say you're sitting there today and you're giggling, right? I know you're sitting there at Merrill Lynch, Morgan Stanley. Maybe even the odd JP Morgan guys watching this from the bathroom. But yeah, I get to work with Bennett. Who's the dude at Merrill Lynch or Bank of America or whatever they call it now, the thundering turd that is working with, like, who's their equivalent of Bennett and who's their equivalent of me? Like, we're just better. We're more fun to listen to at a bare minimum. Okay? We're more relatable. We're relatable people, I think, too. There's so many things BLC about us that is better. How are you doing this morning?
Morning, Keith. Now I'm thinking about a Bennett doppelganger. That's an interesting thought.
Yeah.
I will have a new ticker for you next week. So Once Upon a Farm, I don't know if you've heard about it, Keith. They just started their roadshow, their IPO roadshow, and they're scheduling to go public next Friday.
It's the name of a company?
Yes. So they're a fruit and veggie. So I think your kid's a little bit too old, like mine, a little too old for this. They're a fruit and veggie pouch maker, and they also sell some oat bars. Like Peeler's kids' age. Like
frozen fruits.
Well, it's in a pouch and it's refrigerated. So we used to have like Go-Gurt for the kids. Now it's this.
Oh, okay.
So it's been growing pretty well, 40 to 60% growth the last couple of years, but it's still quite small, $200 million. But they're like installing these fridges in the grocery store, similar to what Freshpet has done, and that's helped sort of turbocharge sales too. And it's a better for you product, of course, right? Organic, no added sugar, great with the moms, right? So they're going to go public, and it looks pretty good. Of course, the play here is to get acquired. They actually have the old CEO of Annie's, which was later on sold, the mac and cheese company, the Better Mac and Cheese. So I think it's sort of a similar playbook. Build it up, grow it fast, and then eventually get bought. So we're going to do a black book the day before, and it's about a $200 million offering. It would value the company about $1 billion, which I think is probably low given this growth rate and how rare this type of growth is in my space. So next week I'll have a ticker for you to follow on that. And then I just wanted to hit on this. I don't know if the retail team is going to go into it, but I just want to call out LVMH's wine and spirits business, and I have a chart here. It really declined. It sequentially declined. It got a lot worse. You can see it went down 9%, sort of missing what the street thought by 6.6 percentage points. It was only 1% in the previous quarter, so that's much worse, right? The trends got a lot worse. I think they cited China. This is above what I do, but I think this crackdown that you're hearing in China is related to this weakness in cognac sales. That, of course, the biggest correlated business for me is Pernod Ricard. It's the RI, trades in France. It's on my short list. They're the other big cognac company, but it also relates to Diageo with their China sales. So a weak call out for wine and spirits internationally, particularly China.
Yep, Pernod Ricard. Let's put Kraft Heinz on the other side of this IPO calendar that BLC is going to keep talking about. The IPO calendar is come to life. Suffice to say, you're going to have the big fun stuff with Claude, the other big one coming out, on the tech side. But there's like a lot of these wellness and food and smaller mid cap food companies that are already public that are breaking out. But the ones that are coming public, they're just taking shelf share from our two shorts here that we highlighted yesterday and today. So again, while Captain Hedge Fund Manager was shorting Brinker and buying Campbell Soup, you were buying Brinker and shorting Campbell Soup, and now obviously on the open you're going to short Kraft Heinz, KHC. So top 5 most actionable there, just to get us going. again, go to Goldman. Who's the person? Who's me and who's Bielsi? Do they work together? What do they do? Do you know who they are? Show us their models. Show us their process. Right, Jenks?
That's right. We'll show you ours if you pay for it. We'll show you ours if you pay. Got to pay to play, man.
Show me your tickers.
I don't have anything actionable today. We're readying for the start of earnings season today or tonight and then tomorrow, and then we kind of have a little bit of a break, and then it's basically 3 weeks straight. So I will pass the baton over to the retail squad. Soaked up a lot of the oxygen yesterday. I'll pass it along today.
Yeah, that was masterclass. So for all of our younger analysts that are learning from you every day, you packed a lot of content in that wallop. All right, really good. All right, McGough. Your youngster there got caught with his pants down yesterday on the call. I don't know if you heard.
Oh, no, I didn't.
Yeah, he didn't read the early look before he got on the call. He was like doing, God forbid, he was doing his job.
Oh. Breaking protocol. We'll fix that. So I wanted to touch on RH. It had a rough day yesterday. It was down 6%. Because they had
Dude, it had a great day. I've been waiting the whole year for this thing to be a buying opportunity. Let's come on. Come on. Yeah, I know what you mean though.
Yeah, well, it was down. The head of their stores, the person in charge of all the new galleries left. And look, it's been like 9 or 12 months since we've seen a high profile resignation out of RH. Working at that company is like it's rough. Like Gary Friedman, their CEO, is he drives the crap out of the employees. It's routine for people to be at work till 4 a.m, working on new product assortments.
Really?
Working on new growth initiatives. Like, he really drives his people hard. So they're good for a high profile resignation every 6 months, never mind every 12 months. But people love to hate this name. So they had a resignation. People are saying, oh, it means they're going to miss the quarter. It means that's bullshit. Like, trends there are going very well. The top line is still growing in the high single digits. And that's going to show up in the upcoming quarter. This company is going to put up the best growth out there in all of furniture retail. So I saw you hit the button on this one yesterday. I still like this one a lot. One of the key things I really like the most about it, aside from the fact that it's growing the best in the entire industry, it's even growing faster than Bob's Furniture. Bob's
like wood furnaces and furniture.
What's that?
Bob's stores.
Yeah, Bob's Discount Furniture. They're doing their IPO roadshow right now. That one's gonna price in about 2 weeks.
Okay.
Company comp down 7% in 2023, comp down 3% in 2024. And comped up 7% in 2025. And now Bain, who owns most of it, is taking it public, and they're targeting an RH multiple. So they're looking at 10, 11 times EBITDA. So if you want, you can pay for the same EBITDA multiple. You can buy the most premium furniture retailer out there, RH, or you can buy Bob's. And I simply don't get it. I think Bain is being very greedy on this one. I'm not saying this thing is going to be a short. Maybe it'll be a short. We're doing the work on it. But they're getting greedy with valuation here, and I think they're smart with timing because the company is comping right now. And we're going to see. We're in quad 1, which is good for housing linked names. So maybe they're following the quads here. but they're striking while the iron's hot. Anyway, the call isn't to short Bob's on the IPO yet. Maybe I'll make that call. I don't know. But the call definitely is to buy RH.
We got that one in the top 5, baby. That's the second time I've used, actually the third time now, baby. I use baby in the early look. Yeah, you like it when I call you baby in the morning? Yeah, it's a term of endearment for us Canadians. That yeah, that's just it's a nice thing to say, right? So just you can look that up in the early look. I was trying to compare and contrast. McGough, you might appreciate this. The personality of a Jersey City boy like Dan Hurley and Mucker from Thunder Bay. Anyway, we do things differently. We're raised differently. Hopefully, you all were, and we all appreciate that. So, when you're putting up with me, I appreciate that. And it takes a lot. So, RH top 5 most actionable. We're gonna pop that in there. I've been waiting all year for it. Like I said, housing was weak. So you also I wrote about that in the early look. Why? There's a 2-factor signal on that. 1, immediate term trade broke, and 2, bond yields broke out back to bullish trend on the long end. And I didn't need to write a paper from Harvard to tell you much more than that. So again, whether you're from Jersey City, you need to pack your car in Mass, you need what you do, you go buy yourself some RH today, all right? For the fam, RH. Thank you. Maybe if I ran Merrill's brokerage desk, we would really get paid a lot more, but we don't do it. It's like Dan Hurley, right? He doesn't need to coach the Lakers, right? He took less money to stay at UConn. Mentor kids, coach people, stay with his process. He chose that. Love that. Tom, yeah.
Yeah, I'm here.
So yesterday, just like I'm trying to encourage people to use the concept, not a concept. It's just it's a tool, right? It's like an off switch on a chainsaw. For those of you that don't have the safety on when you use power equipment or wrist ranges for that matter, if something breaks, trying it to stop. Right. I said yesterday, if you sold UNH when it broke trend, you saved yourself a lot of money. Now you got yourself a headache if you didn't, because you're doing what a lot of people are doing. We know it. I know it. There's a significant percentage of you, actually, and this isn't a small percentage. Sometimes I just say that to be nice. It's really a lot of you don't use stops. You hope and pray that the thing bounces. And that's what you're doing today if you're still long UNH. Not what I'm doing. If I'd have to look actually at our portfolio managers at Ham if they executed properly. But again, there's an off switch for a reason on a power tool. You should use it, and that's what happened. There's a very low likelihood, Tom, because there's no catalyst. And how far there are two factors: how far away UNH would have to get back to bullish trend, and the time and space between that and the catalyst. I mean, that makes it very low probability that you get there anytime soon.
Yeah, and I think from a fundamental perspective, like the indicators in the environment that are going to tell you that you're close. I mean, I feel pretty good, I guess, about where we had MLR pinned for the quarter, where what we can see sort of in the immediate term. And then what we couldn't see was the MA rate, killing that for 2027. But then again, nobody can really know at this point. And I think the estimate, really, the way the mechanics of that arithmetic are, okay, I have X number of MA members at currently getting this PMPM per member per month rate. Now I'm going to have like this 300 basis point, reduction in that MLR. Right, because I'm just going to eat all this. The assumption, I think, in the way that stock reacted was that they're going to eat the incremental, and cost trend's still rising, this, that, and the other thing. So I think, I think it's hit the pause button. It's on our bench. I'm not sure what to do with it on that front. I don't think I want to short it because I do think there's a structure here that works in their favor, and maybe I catch data again. The dashboards that I'm going to be looking at the next 3 months into Q1 earnings and what they say incrementally from there, I think is, that's the next bet. Complicating that this morning is Elevance, which is adding to the problem pile, essentially taking a $31 number that consensus is sitting at for 27, turning that into, $28.56. So about a 10% down move, a little bit softer, about $1 lower for 26, talking about 12% guidance or 12% growth for the next year. all of the things, all the marginal things that are negative for UNH yesterday are coming through today. So you're getting another down leg in Elevance. I'm sure that'll hit UNH as well. So I'll be listening to that call and trying to sort out some of this. I do think structurally, if rates are accelerating and costs are slowing, that's margin expansive. If the policy agrees and stops hurting, then these stocks are you just have to figure out the point in time at which you sort of re-expand the operating margin is that's really the bet, right? And the first bet is that happens. The second bet is when. This really isn't I don't think a question about this isn't a terminal. These aren't terminal companies. These are turnarounds, at the very early stage of just entering the chop bucket or the cycle to the downside, right? It'll get sorted out. It's almost impossible to kill a healthcare company, and these are a couple of the biggest. So, and then the other sort of feedback I'd give you on HCA and the way that behaved. If you saw that the other hospital companies came out positive, sort of rallied on the HCA news, and I think part of what they're guiding to was definitely within the realm of what I was looking for. And I think on the margin, what they were doing over the course of the call was layering in a lot of trapdoors, essentially, leaving the door open for, this not to work out well, that not to work out well, all else being equal kind of statements. And I think on trend, relative to what we're seeing and the data that we have, all of those things are going to happen, right? Like all the stuff that they're hoping doesn't happen, or we think somebody who's uninsured is going to consume 30% less medical care than somebody who's insured, which is not how it works. Like people who don't have insurance just don't consume medical care, and you're just not gonna, that's not gonna happen, right? So that's just one comment that they made. And then what you saw in the number was really, my impression of it was like, God, this is a weak surgical number against an easy comp, like a negative comp, you comp negative, like what's going on here? Tenet actually rolled over. They're very exposed to that trend, and Surgery Partners, right? So I think there was a bit of a relief, or I don't even care to describe it, but all I see is an upstock as an opportunity here on the short side with HCA. I'm going to write a pretty detailed note about how we forecast the P&L. Again, I think we were actually on the mark with the EBITDA number. Stock went up on that, right? Like I thought that was going to be that was kind of a known going forward. Again, there's a lot of trapdoors here that they've laid out. I think they're guiding to slower growth in 2026. I think it's going to be down, right? So that's where I am with HCA. That's it.
Yeah, I wouldn't short that. I'd short THC, which was actually down on the day. It's a much better short from a signal strength perspective. And what do I care? They're just tickers with the same factor exposure and sector style embedded therein. Like in these, like our talk about our portfolio managers at Ham, like they get, the reason why Tom's mentioning this is that intraday, if something breaks bad or breaks out on trend, if you're short it and it breaks out on trend, that's bad. But I mean, breaking bad, like breaks down through trend or breaks out as a short up on trend. My signals the success of them speak for themselves. The question is whether my analysts and portfolio managers obey the rules, right? You can either sit in your house if you're married and my wife drinks tea. Your wife drink tea, Tom?
Yeah, she's a big fan of the tea.
Okay, so you know how like when the pot, you have a whistle on your pot for the boiling water. You got that in the house?
No, we have a fancy one that you set the temp, and it makes a very nice tone.
Oh, okay. So I have the one that just will wake up the roosters. So when the whistle starts going, and you either address the fact that pot is boiling, or you don't. You can hope that the trend signal breaks back to bearish and that the thing stops whistling, but there's really no catalyst for that unless you take the pot off the stove or turn the element off, and still it's going to be whistling at you, obviously, if you keep it on the same place. So, this is it. I know it's really hard for some of you on my analyst team to do this. Well, evidently it was hard for Felix to not cover the CoreWeave short, but it wasn't very hard for me. And it certainly shouldn't have been hard for, we have a couple ETF products that short stocks. It shouldn't have been hard, right? When it goes to bullish trend, you cover the short. That's it. And if you can't do it, I'm going to keep making it a public issue for my own teammates, because that's usually the only thing that you can do after after you tell a bunch of players. There's one thing that I hate more than anything else is you say the same thing over and over and over again, and the same players keep making the same mistakes. There is nothing worse in coaching than that. So, yes, I'm talking to my team, and no, I'm not talking to Tom and HCA because that's just brand new as of yesterday. But I am talking to all of you saying I wouldn't short this thing. I mean, this thing's got to break bad back to bearish trend, and it's been a real annoyance to stock on the short side. But it had a absolute classic Hedgeye breakout trend signal on like epic volume yesterday. So evidently the hedge fund community fundamentally agrees with you. We know that because we see their feedback. Hey, I like this HCA short now because it looked like it could break and it didn't. It broke out. So you got to get the positioning right. And that's part of my signal. Like flows and positioning are every bit as important as what Tom says fundamentally. I mean, in many cases, more important. So in the shorter term, immediate term trade windows. So we'll see about that. And Tom's not going to take this personally. He's one of the most coachable players and teammates I've ever had. So hopefully everybody can learn from that. All you analysts that stay with your ideas when it's getting squeezed in quad one is no happy matter. Okay. And now that we have these positions on in Hedgeye Asset Management, or the portfolio managers do, I am on it. And I mean on it. Emily, on it, like a brush on the car in Tennessee, like all this stuff you got to be on top of. Entropy has hit your home.
Well, you know who's not on it that's the Department of Public Works in Nashville.
Well, why don't we have national emergency headlines instead of Minnesota about that? Like, yeah, a lot more people are dying, and I'm not. This is not. Like some of the things I say are a joke. I'm not joking. People are dying and really getting in a very bad health position due to the lack of public safety and public works in these areas that got smoked. I mean, meanwhile, we're going to ask Andrew Ross Sorkin everything you need to know about Minnesota. I mean, I'm not saying that what happened in Minnesota is good or bad. I'm just saying that they're picking and choosing their stories.
Well, and it all gets back to the same problem that nobody wants to talk about, which is just honest to God competency, just being good at your job. If you're in law enforcement, your job is to enforce the law. If you're in public works, your job is to plow the streets. That's your job. Go do it. It's rapidly turning into a big political problem. And I've been in a hotel since Sunday, and I'm very grumpy. But I got the hotspot to work yesterday, so at least I have an internet connection. So making progress there.
Oh, so I didn't make you feel all warm and cozy in your apartment in San Francisco, subscriber. Again, the best thing you can do in life is read a lot of books so that you can figure out that other people live entirely different lives. And two, open your freaking eyes away from mainstream media, because there's a lot of shit going on in this world, not just their narratives.
Yeah, if there's anything that I've learned over the last, 5-6 years, is that you really got to be on guard and not think about the things people tell you to think about.
Yes.
That they're just like poking that part of your brain to get you to think about this thing, and it's irrelevant, that thing, whatever that thing is, so I wanted to mention, Keith, since I was out of pocket for the last couple of days, the Medicare Advantage advance rate notice that it sent UNH down 19%, because of 25% of their business is Medicare Advantage. Read the rate notice, and here there's a couple of problems here. The first, obviously, is the government really doesn't want to give anybody a pay raise in that particular segment of the industry. The other problem is that the rate setting for Medicare Advantage is kind of retrospective. So what we see is them looking at benefit, patterns, claims patterns, enrollment patterns, and making their decision based on, that retrospective information. And then they do, a little bit of forecasting on enrollment and so forth. But and that's by design, by the way, so the government, because it's a very stable system and it doesn't change a whole lot. But at the same time, the Office of the Actuary, who released their projections for 2025 and out, they're calling for much higher Medicare Advantage benefit trend that is a reflection of the fact that the biggest bolus of the Medicare population is moving into their high utilization, high cost years. So it's going to be just a rough go here for about 8-10 years before it starts to go back to what I call a normal cost trend, which is in that 4-5% range. In the meantime, of course, a lot of stuff's going to break, but that's a problem. So what is going to have to get reconciled here is how in the turnaround story, because Tom's right, healthcare companies don't usually die, is that they're going to have to come up with a different approach, a different business model approach to how they're handling that population. The good news is, and this is why, UNH is down 19%, Cigna's only down, 3.5% yesterday, because they just said, forget all that, we're going to serve the commercial market. The cost trend in the commercial market is, in that 3-4% range on a projected basis. And that's going to be an easier population to deal with. So that's it for now.
I love it. I love it. There's so many things to talk about. Like if you don't think that some of the things I say resonate with at least some people, like this morning, along the same lines, like you can either, be in a hotel room in Tennessee, or you can be opining from Andrew Ross Sorkin's desk in New York City on Minnesota, or you can be sitting there giggling. One subscriber just pinged us on Twitter. Thank you for enjoying my perspective. But what I wrote this morning, Emily, was, I prefer my process and Thunder Bay versus Jackson Hole, like in a suit. That's just me. I don't, Jonesy was, drifting this thing out here, Steiner, that I'm going to join Rick Reeder at the Fed, but that's obviously a joke. I would prefer, given both places have a lot of snow, I would prefer to eat a steady diet of yellow snow to work for Jesus Christ himself at the Fed or Rick Reeder or anybody. I'm not doing that. Okay, just to be clear.
So just as a quick aside, was watching Jeopardy last night with the kids, and it was a rerun, but the clue.
Who watches Jeopardy reruns other than the Steiner family? I mean,
well, anyway, the relevance is that the clue was none other than T-Bay. It was what city in Ontario has a stormy storm associated with its name, and anyway, nobody got it, but I did. So
like now I'm going to get you some Thunder Bay trivia. Now that everybody cares about Thunder Bay, you got to understand Thunder Bay. If you're long metals and natural resources, you definitely have to understand the biggest freshwater lake in the world. You have to understand the shipping lanes. You have to understand the danger. Like, of course, many people probably know, Steiner, if it was on Jeopardy, what is the wreck of the Edmund Fitzgerald? Everybody knows that one. Should be 1975, right before I was born. If you don't think I was born in a storm, I was born in 1975. I was born in that storm. When the gales of November came in 1975, it was actually the biggest storm since 1913 for the Great Lakes, the biggest loss of life. So again, that sucker we come from risk management territory. You do not need to risk manage jack shit from Andrew Ross Sorkin's seat at CNBC in the morning.
Gordon Lightfoot, he did it a good service.
Yeah. Yes.
So anyway, don't really have too much this morning. We're kind of in a very temporary lull between earnings here. I would mention briefly, and I tend not to, to sort of toot our own horn very often. But this morning, I did want to just sort of redirect people to our Q1 macro themes. Q1 macro themes, number one being USA Quad 1 Goldilocks, number two being rate cuts, America's decelerating inflation, and number three being long gold, metals, and EM. And, it's not always the case that we get, all three of these dead right. But boy, are we on a heater right now. So I'll knock on wood here. But yeah, it's been pretty good. Anybody who paid close attention to us early in January when we rolled these themes out, I think is assuming they listened to what we were saying, is doing pretty decently right now. And then I would say on a follow-up to that, this whole thing with the dollar, obviously, front and center on Bloomberg and the sort of emergent weakness and Trump's comments yesterday and all that. One thing I would remind people of is that the central tendency of the dollar is to be at its weakest in Quad 1. That is actually its sort of normal behavior, the central tendency, like I said. So the strongest environment, again, central tendency for the dollar is in Quad 4. The weakest is in Quad 1. And then, Quad 2 tends to be weak, though not as weak as Quad 1. And Quad 3 tends to be strong, though not as strong as Quad 4. So that is the norm for the dollar. So, seeing this weakness in the dollar and all the sort of consternation that it's causing in mainstream media, I would just remind people that it's kind of doing what it normally does in Quad 1, which is it goes down. That is normal.
And
So
its inverse correlation to gold goes up and to base metals goes up. I mean, the reason why Mike Bloomberg and mainstream media on the financial side is just apoplectic about this dollar move is that they're not long gold and silver. If they were, they'd be writing headlines like I wrote this morning, right? You have U.S. growth accelerating and our retirement accounts are ripping. No. They still want to talk about Greenland and Minnesota. I mean, they're still fucked. I mean, they're probably still long Bitcoin, crypto, and a bunch of Bag 7 stocks. I mean, this is what's going on, Steiner. It's like the performance of the game. Of course, the losing teams are miserable, and they come up with more bullshit. I mean, the U.S. dollar index signal is one of the best signals we have at Hedgeye, and so is the gold signal, and so is the Bitcoin signal. They're all built on the same damn fractal signal. So, it's not new. It broke bad like 2 weeks ago. I mean, it's not. This is now news to mainstream media, but they don't even understand what the news is. An 86% inverse correlation on immediate term trade duration to the dollar, right? You should be able to say that quickly, by the way.
So anyway, I won't hog any more airtime here. Just wanted to flag that and give people kind of a public service announcement.
Well, thank you very much for your service. Appreciate it. Keep those kids playing that game. All right. All right. Thank you. Van Skyver, what a day. What a day you had yesterday. You got some of your longs went up, then you can sell some of those and buy like UPS and buy some more PACCAR, some JB Hunt. Like if people know how to rotate and reinvest their capital, your sector is the absolute best in terms of single stocks. If I was able to trade your stocks in my PA, dude, I'd be able to buy a bigger boat, Thunder Bay.
Yeah, no, it was an unusually good day. I think, are having some success on the short side. I think tightening up the short side to just sort of these very focused.
Oh, there was that. Roper got rinsed.
Yeah, I was most excited about because in a Quad 1, in a cyclical sector, like you worry a lot about what's on the short side, and having Roper, which I think is a great example of where the signal was really useful in helping us to prioritize. Like if you look at our themes deck, our number one short is Roper. Why? Because it's working, it's going down, It's broken. It has a really bad narrative emerging with AI, and it was always sort of I mean, it's not technically like a fraud, but right, the way in which they report numbers is selling investors sort of a misleading story that they generate all this cash and they're compounder or whatever. And it's just the same version of a roll up we've seen so many times before, particularly in the industrial sector. We see a lot of roll ups, and roll ups blow up, right? It is structural. But I thought it was really, I mean, I personally found it really useful to see that signal over and over again and just be like, you know what? This is going to be exactly the kind of thing we want in quad one, right? And we move it up. We have a couple other things that we're flagging. We got Volvo. They are also sort of flagging higher North American truck sales for 2026. I think that is indicative that we're on the right side of PACCAR. We should have Volvo as long as we have them all, as long as it's going to be a big year for trucks. We have the deck I actually liked the most we did last year was the HVAC deck, where we did a lot of work saying, look, these HVAC names are really cheap. They look cheap and they're going to get, cheaper. It's just like too early. And this Lennox, which is a HVAC maker, is just a total mess of a report. I mean, they missed top line income, continued destocking, softness, dealer activity is a problem, just in general. I think we're still a couple of quarters out. It's going to be a great long. I agree with all of sort of the value-oriented people that at some point this is going to be an amazing long. It is not an amazing long yet, and that is because they changed. There are just too many really significant hurdles this industry. Refrigerant change, the canceling a lot of the IRA subsidies for HVAC. There's just and then the stocking associated with, I guess, both of those things finally, but mostly the former, is just an ongoing problem. And, even there's like a little bit of self-own in this one. So a lot of problems there. And then the one people that I think own most broadly in industrials, which is GE Vernova, which is the power generation. They make the combined cycle gas turbines that are going to fuel the AI revolution, and they do, and they're getting a lot of orders for that. And it's down a lot. I think it is like this one, when you read through it, there's some like specific things like wind, and wind is obviously not loving life, right, in the Trump administration, and that's some of their subsidies also went away. But the reality is that we have GE Vernova is very much the best maker of power generation equipment, certainly the most established player. Like you might want, we have a fuel cell long where you have I got a question yesterday on SMRs. And, those are really interesting technologies, but they are not scaled. They're not installed. They're not tested. No one's going to spend tens of billions of dollars on them. They are going to put in what GE Vernova makes. And, that is a cycle that's, the install base is very old. The replacement cycle really needs to go AI or not. AI makes it more critical. Backlogs continue to grow. So that stock is off. It's not on our best ideas. That stock is off, but I wouldn't be surprised if that's not like a long-term thing. That's I think less of a feature that way.
What's that? Is that the ticker on that's GEV, right?
Correct, GEV.
There's a stock that a lot of people think they know because it's thematic, right? And it's, if you go all the way back, it's big stock. But I was talking. I had probably the best dinner I've had. Well, definitely the best dinner I've had in 2026, but definitely one of the better ones I've had in a long time. You know him. He runs one of the world's largest hedge funds, and I'm not trying to, say anything beyond that. The guy just sees a lot more than everybody on this call, I think, or at least most of you, unless Ken Griffin's on the call. Good morning, Ken. But he gets to see everybody's books, et cetera, et cetera. And he said, the most amazing thing is just that, is to see all the best into the quarter. So this was actually that into the quarter. And you could see it was up a lot. I'm not in front of my screen. Wasn't it up a lot into the print? Because we end up talking about this stock. And I don't even know this stock, but I know a lot of people on this stock, right? It's like, oh, that's the way to play this. I mean, I fucking hate that. That's the way to play, right? That's the Bitcoin of this, or that's the digital gold of that. Your work's got to be better than that. It's got to be much more differentiated, i.e. you should be long Packer and JB Hunt instead. Have a model, have differentiated work, and not be, most importantly, positioned the same way as the crowd into an event. That is the most important thing that guy cares about that I had dinner with, which is supposed to be, you know, like a normal dinner, hour and a half or 2 hours is 3.5 hours. I mean, lots to talk about, evidently. And all we really talked about, Jay, were these flow and event risks and how the game has changed versus, like, he's my age. And we've been both doing it for a long time and we're good friends and all that. But it's like, you know, those things are so much more important than they've ever been, given the amount of edge that hedge funds have that is a similar holding, right? Like the same thesis, the same pick, the same position, you know. So that's just, so you're saying that stock's down a lot. That would not surprise me, just to what it do to that alone.
Yeah, crowding works until it really doesn't.
Right.
Especially
Yeah, and one thing to watch for is names that are like what I think of as flickering, like they're teetering on bearish trend breakdowns all the time, and they don't quite have it. And that's typically in a widely held stock into an earnings event, because everyone's hoping for that event. Like Felix was talking to me about Apple on this front yesterday, because it's flickering. It could go back to bullish trend. I mean, Meta actually did go back to bullish trend yesterday. These stocks are flickering. So it's like, what's the catalyst? What's the catalyst? Is everybody long, you know, the view that Meta's going to have an acceleration on revenues? Well, if they do print that, I would bet that it confirms its new bullish trend as of today, and I don't have to shit on it every morning anymore, which would be nice. So I just, you know, the flickering, watch for those. That means that if it's flickering, it means what? It did two of the three things before a very bad thing. One, lower high in the risk range. Two, broke a medium term trade. You know, GEV, by the way, had done both of those. And three, once your trend breaks, you're shot. This market does not let you out of a thing that breaks trend on a fundamental reaction. Helen of Destroy yesterday, HELE, and Van Sciver's Roper got absolutely rinsed. Okay. So again, not new ideas, just ideas that were very much correct on the short side. Nice job by the portfolio managers that can short stocks and being short both of those, by the way, which I saw on the board, which is great. Anything else?
I'll leave it there. I will say that the word baby was ruined for me by Arnold Schwarzenegger's book, which is Rest is for Babies. I've always said it. Rest is for babies. Also ruined resting.
Oh, got to do the work. Got to do the work. All right. Thanks, man. On stocks, I put JB Hunt, by the way, in the top 5 most actionable. Was waiting on that one. I was going to do Huntington Ingalls, but your batting average is too good. Yeah, as soon as I put a buy signal on that, everybody buys it, so it goes up 3% in a day. It's like, that's pretty good for one of our best winners of all time. All right, Freebird, you hear me? You feel me? You hear me? You appreciate me? Thank you so much to me for the new signal on Meta, or what? What are we thinking?
Yeah, I was actually surprised to hear that because I didn't see anything come through. Yeah, I mean, look, I think it's great. I mean, look, I guess if it holds, we've been talking about Q1 guide being kind of a catalyst here, and Q1 looking for revenue acceleration. For Q4 specifically, we think that revenue growth comes in ahead 24%. That they can guide the high end of Q1 towards an acceleration, potentially as high as 27% growth, which I think would be really positive because they have a track record of coming in and reporting at the high end of their guidance range. Meanwhile, the consensus is sitting there for Q1 at 20% revenue growth. So it would represent kind of a pretty meaningful beat if that does happen, which we have been thinking it will. And the delta between consensus and that number is still really wide. So even if it's, not 27%, but if it's 25% or 26%, I still think that's positive and would represent an acceleration in Q1 versus Q4. And again, what we've said is that for the year, they need to really, post at a minimum, 19% revenue growth, but really we think they can come in closer to 22% for the year, in order to, and in doing so, even if they raise their CapEx and OpEx guidance modestly, if they issue CapEx and OpEx guidance, official OpEx and CapEx guidance for the year, that is even modestly above what they've already signaled to and where the street is at currently, that they can scale all that and generate earnings growth of 10% in 2026, where the street's currently modeling basically no earnings growth. So good to see that the signal is lining up on that. I guess we'll have to just see what happens on game time tonight.
Yeah, for me, game time on this is I do nothing. Right. So tell me if this makes sense, because I'm going to start, asking these questions to you guys when I have time. If I had to bet on Meta, which the guy that I had dinner with last night has multiple PMs that have multiple bets on Meta on both sides. Right. If I had to bet on Meta, I'd bet on the signal and you today. But I don't have to do that. So I choose not to bet, because the downside on the risk range is epic and would put it decisively right back to where it's been for the last 2 months, which is bearish trend. And I don't have to play that game. So that's how I would play it. I don't have to. I also have a pretty wide lead, to Steiner's point. So it's like the Patriots. You watch the Patriots in the Broncos game when the weather came on and the Patriots had a three-point lead. Like, just don't throw the ball. You don't have to. Let them make mistakes. Like, let them throw the ball to you, and we're going to the Super Bowl. That's, once you know that you're winning, it's so much easier to play the game than when you're losing. People have been long, Meta, Apple, Microsoft have been losing their ass for like 2 months, but now the game's totally different into game day. It's actually an extremely difficult setup, I think, for all three of those stocks. Apple's just inside a trend, Meta's just above trend, and Microsoft's about 3-4% away from trend. So those are real hard. I mean, it's a lot easier to ride the losers until the game's over and then not have to be there for the, like you said, game time. It's not, you don't have to be there. Some people do, right? And if you thought the time to buy those, Meta in particular, Microsoft at the end of last quarter, I mean, you're decisively wrong, right? I mean, so now you got to figure it out, right? You either have a position or you don't, and you go from there. So that's just what I think it's okay to do nothing is the point.
Yeah, I mean, I think it also just depends on what game you're playing, right? I mean, and also sometimes, like, if your bias is to action, sometimes you should actually, inaction's the right decision. And, in your case where you have a go anywhere strategy, right? You don't have to, you don't have to be, trying to make calls on names that have tougher setups. If there's cleaner setups with higher probability outcomes, both from a fundamentals perspective, then just do that, right? I mean, you don't, like, trying to force something where it's not clear, that's when I make my biggest mistakes, right? Is when I try to force something. But there's also people that, have to play the game, right? Like, Meta is a huge index component within, if you're, a comms analyst or a tech analyst. And so your job is to have a view and make a call on these big prints into it. And so regardless of how difficult the setup is, and, and look, from here, we've said that, risk reward is attractive over a longer duration, that we've expected to see kind of a pod one acceleration for Q1, that Q4 should come in fine, if not a little bit better. So, I'm not the stock ripped from 600 to 673 in 1, 2, 3, 4 trading days, right? To the high end of the range.
And there was a shitty sell side upgrade in there. I wouldn't call,
Well, yeah. Well, look, either way, right? Like, that's just the point. Like, I hate, like, when I have longs, or long bias, I hate it when they're up into the print, into a catalyst, right? That I agree with. And I like it to be puking into a catalyst, right? Because that means that positioning is offside, you know? So anyway, we'll see what happens. I mean, look, longer term, if it really works, you know, there's plenty of upside to capture, just like you didn't have to be there, you know, catching Google necessarily all the way down. You could have waited and still captured, you know, pretty much double in the stock. So
yeah, the process is way better at that, by the way. I'm way better with you if I just take the print for what it is and then intra-quarter reset. I've done, like, that's the way I play best with you. Other analysts, it's different.
Which, by the way, Keith,
you,
like it's also interesting, and this will be my last point. Like, just working with a lot of different buy side PMs, right? I've just noticed that they have their own style, and like we click and work better in certain things, right? That you and I may not. So it's just interesting that it's just like it just depends, right? Like on kind of everyone's process and what they're trying to optimize for in that sense. Anyway,
I mean, we had this coaching session yesterday for Macro Pro subs. It was very popular, well received. I don't know if you saw that, but lots of questions. It's a Q&A session, right? Very good questions. And feedback was one guy who's been with us for a while. He goes, you know what? It took me a while to figure this out, but the best way to use the process is to just do what you're doing. I'm like, really? When the time to notice, unlike how Freebird said, well, I didn't notice that yet this morning, yours truly notices what Meta is doing every day before 6 in the morning because I'm the one who models it, right? No matter what's going on in my life, I have to model that fucking thing. So I'm on it. When it initially breaks trend, anything breaks trend, over 80% of the time, you're going to be right going with that signal for multiple weeks and in some cases months and in some cases years, right? So you should do that. When something then flips back to bullish, like Meta, albeit it's only one day, easy decision. I do nothing. I don't sit there and rest on my, the signal's laurels of nailing Meta for as long as the signal did. The signal just changed, so let's just stay with nailing it. Right? Like I said yesterday on that call, Friedman, we're either winning here at Hedgeye or we're learning. All right. Meta top 5 most actionable, if you couldn't tell. Was that it?
Yes.
Felix, yeah?
So a lot of things going on here. Let me just start on the research. On the research front, yeah. I wrote 2 notes. One is on the bombshell news that Tencent is disposing their stakes in JD and Meituan. When I went over to their Shenzhen headquarters last year for Tencent, that was the sense I got from management, which was they were going to downsize their investment portfolio. And indeed, that's what happened yesterday. So really big news out in China. The second thing I want to know, I wrote a note on Apple. Apple stock is recovering, but they only recovered since last Friday. I wrote some changes to the App Store that's actually driving more positive sentiment there for Apple. However, I remain more concerned about what management is going to say tomorrow night on earnings, particularly as it relates to iPhone costs and also the iPhone demand curve outside of China. So we remain less optimistic than before on Apple, but we still have the long position, and we laid out our case two weeks ago. Finally, I want to congratulate NVIDIA. They finally got the green light for China to receive H200 chips. China is a core point on why we're bullish on NVIDIA. So that really played out for us really well. I also want to congratulate Anthropic. They raised their revenue target by 20% for this year to 18 billion because of recent success with Cloud Code. For some perspective, that's 300% year over year if they can hit that in terms of revenue growth. But the bad news is, and this has been a big concern for all the AI labs out there, particularly the biggest ones, is profits. No profits. They were thinking about 2027, they may get to profitability. Well, now they're going to say it's going to delay to 2028. One reason why, training costs is topping 100 billion this year, 100 billion this year on training costs. They're expected to lose at least 10 to 15 billion dollars. Anthropic. So the cash burn continues for all of these AI labs, but definitely the growth opportunities are equally exciting. So I'll leave it at that. That's it.
Good, really good. Can you hear me? You guys still hear me?
Yep, can still hear you.
On Apple, just to do what I just did with Friedman, on Apple, I choose to do nothing. Now, if you have a position in Apple, which almost every single person who has to beat the S&P 500 with as their benchmark has a position, whether it's underweight or overweight is an entirely different question, as Sam Rahman could teach you. On this bounce, I would reduce it to my minimum. That's what I would do. If I had to have a position, which again, I don't, I would reduce on strength, given what Felix just said. It's signaling lower high, it's bearish trade, it's still bearish trend. Just because it's knocking on trend's door, I mean, sometimes that's, most of the time, that's actually the point. When something's bearish trend, that is a door. The door is not going to open. It's in your face. It's called resistance. All right. So just keep thinking through your process. Like, you need to make your decisions on these things. I'm going to give you the tools. Again, McCullough is a great chainsaw brand, by the way. I highly encourage new users, especially if you give your kids a chainsaw, to understand the safety function on the saw. Okay? If you choose not to, because you went to business school and you're super smart, you got all these valuation models, you don't need the safety for your kids, that's on you. But I'm giving you the chainsaw, the safety, the manual book, everything. John McCullough could help you with that. We got lots to learn here. Winning or learning. Paul, you on?
Yeah, good morning. I know we've talked a lot about Meta. Just going into this trial that starts now in California state court. There's a federal court case going as well. Thousands of cases, right, alleging harm by social media. Snap and TikTok have settled out of the bellwether cases. They're still in all these other cases about social media harms to youth, but they settled out. So that means Evan Spiegel, as Snap, for example, is not going to have to testify, at least in this initial bellwether trial that's starting now. But Zuckerberg is. Meta Platforms is in there. YouTube, Google YouTube is in there. And they're going to testify. And remember, this is not like testifying before Congress. This is testifying before plaintiff's counsel and a jury and a judge about social media harms and all the research and documents that they have about whether or not they had knowledge about the potential harms of too much social media engagement, youth brains. We're going to have, biological expert testimony about chemicals in the brain that are activated by all of this stuff. It's going to be a very detailed case. So I would just say Zuckerberg, I think, will be testifying the next several days of this trial. I think everyone is going to be there for the show. And the question really just becomes when do people really focus on this as a, as a potential weight? And I would just watch for this one because it's just hard to predict I think it's notable that, these companies are settling that to try to get out of the testimony obligations. I don't think Zuckerberg can. And I'm just saying,
he can't get out of this
watch
one.
It. Watch that.
He's right fucked with this one. I mean, if let's just take, I choose to do nothing on Meta. If it fails here, this is like exhibit number 1 on negative catalyst spending for Zuckerberg. This is not going to go well. Like when you say all these chemicals in the brain, I mean, you have to be a certified idiot to not understand the manipulative nature and the intent to use that manipulation that is inside your amygdala, fully loaded, that company has employed since the beginning of time. Like, read Careless People. Read, just wake up and take a breath of fresh air and think for yourself. I mean, so that to me is like very obvious. We got to keep going here. But anything else?
Yeah.
JT, I'm testifying. You hear him on testify? I'm testifying.
Yeah.
Testify. This person driving beside me is like, what the fuck?
Keith, there's not much progress since we were on yesterday. But again, the difference between this and the last time around is that the temperature in more ways than one is low here in DC. And both sides are still talking, especially in the Senate. There are a couple of big meetings today. The Democrats are meeting at lunch, the Republicans are meeting at lunch. As a group, everyone's still talking about trying to find a way forward, but their hands are tied just because the House is gone, and the bill already passed the House. And again, if you change the DHS portion of this right now, the Homeland Security portion of it, it has to go back to the House, and there's no guarantee it'll pass a second time around. So this is pretty thin ice here that they're walking on. So the most obvious solution to me and others here is to pass this as is, the next 6 bills, and then move on and find another legislative policy solution to put some reforms into what they're looking at DHS. And then just secondly, Keith, I know you probably saw this yesterday, and Jay pointed it out to me this morning, but the USS Abraham Lincoln is back headed toward the Gulf, and there was a tweet last night by Trump issuing quite a stern warning to Iran. So we're watching that and ready to opine at some point in the next week here if he decides to take action here. But these are then there's fighting words, Keith.
Yeah, well, that when you have a 3.5-hour dinner with another man and it's not your spouse, talk about a lot of stuff, right? And we eventually got to that. He's like, any thoughts on that? Like, because again, when you're overseeing a hedge fund that's that big, you cannot, and you have multiple gas and oil traders, et cetera, you cannot not have an opinion on that, right? But my answer was, like, I don't have to have an opinion that's anything other than my signal. So what my signal's saying on that Iranian factor exposure, if you will, or what you just said, which was important to him, right? I mean, what's important to you and what's important to me can be two different things, but I have a process to at least contextualize what's important to you in a different way than anybody else on Wall Street can. Because I'm gonna contextualize an Iranian risk inside of a signal and an economic quad. That is multi-factor, that is rails. That's why we do this. Okay, so again, what I said was it's pretty recent with the correlation risk picking up on dollar down and commodities up. To begin with, CRB index has like a 0.9 inverse correlation. Oil has broken out the bullish trend on both WTI and Brent. So I would say that risk factor is monetizable. You should be buying, you should keep buying the dips in oil. And he's like, oh, I never heard it that way. I'm like, of course you did. Nobody has my signal and nobody has my quads. So we kept going on and on. Tons and tons of topics. If you're sitting at that table, you might have had some fun. All right. Thanks for joining the call.